Hello, gorgeous people. It's Arsaba back with charts and news. Today is the first market open day of the new year. It's a very exciting day. All I ask is that you guys like, subscribe, comment, and share. Subscription will be the best 2 seconds you can spend of your life. Liking the video would mean the world to me as well. You're basically getting a free subscription to one of the best informative, technical analysis, objective outlooks multiple times a week, guys. Great predictions, and we're going to talk about the silver trade that I'm going to be going into today. But we're watching some other things. I want to look at Amazon. I want to look at natural gas, crude oil. The dollar's moving like crazy today, and the 10-year yield. So let's get into this. Amazon, first things first, okay? Now, I haven't really been paying attention to Amazon. I more so pay attention to the indexes like QQQ or the NASDAQ. And what I'm seeing right now is that Amazon is fighting this $84 level, and it moved up. It's up in the pre-market to like $84.80. But what's so special about this $84 level? Well, guys, these are the COVID lows. So when we capitulated in March 2020, that's how low Amazon got. Cool. What am I trying to get at? Well, it's going to be a very hard level to break if it breaks it. So I want you guys to keep an eye on Amazon because, like you can see over here, we have strong bullish divergence with the RSI and the MACD. The MACD is pretty neutral. However, I'm seeing short with my QQE signals indicator here. So just keep an eye on it. Let's see what happens. Maybe it breaks a little bit to the upside, and then we see long here. We get a full-on clear green MACD, and I think it would still be a great opportunity to go long. Also, the 30-day moving average is a great indicator. Right now, it stands at $89.73. So keep an eye on Amazon, guys. I'm going to be looking at it every day so you can see what I think, whether I plan on going long on it. I see some more interesting trades, specifically today with silver, and we're going to get into that right about now. So silver, this is the targets and stop loss that I'm doing. So right now, it's trading around $24.27, 26 cents. So I got short on QQE signals. I got a red MACD. I got bearish divergence. That's my cue to go short. Okay. If it crosses below or above $25, my stop loss is a loss of 3%. But I'm doing it on a 2x leverage ETF, so it's actually a loss of 6%. And then I want it to go down to $22.90. So my target is a gain of 5.6%, which would be 11.2 with my 2x leverage ETF, which is a good risk to reward ratio considering that it is a lot more likely to go down than it is to go up. So I'm loving that trade right now. Not worried about it. We'll see what silver looks like at the open. I know earlier on today it actually hit $24.54. I would love for that to happen before the open. I would love that, and then I could short at that price. But, we take what we can get over here, guys, okay? Let's move on to crude oil. Crude oil, okay, so I think I'm also monitoring crude oil to see a possibility to go long here. Bullish divergence, green MACD, long signal on QQE, above the 30-day moving average. So that's even, better than what silver was at, because silver wasn't on the side I wanted it to be for the 30-day moving average. Why am I not going long right now? I couldn't tell you. It just doesn't feel right. It just feels like silver is better. And that's just like me, my gut instinct being weird. But crude looks ready to just boom. And I can't see anything bearish besides the fact that it's below the 200-day moving average. But it has to go above it, or not above it, but reach it eventually. So we'll keep an eye on that, see what it does. But I wouldn't disregard anyone who decides to go long on crude right now. And if you guys do, it's not a bad idea. So we're going to keep that in mind. Remember, I told you guys, you know what? I'm going to get some vertical lines. Or no, some horizontal lines. Okay. Look, see that? Every time I put what color should we go with, guys? Purple. So every time I put a purple horizontal line at a price, so we got 79, whatever, $80, I told you guys to go long here. and we'll see what it does. We'll revisit this chart tomorrow and next week, and it's a good way to hold myself accountable to see if I was right or wrong. Purple line, keep that in mind. Cool. 10-year yield. I did this one on a line chart because the candle chart failed to show that it is showing a double top pattern. This is as neutral as it gets, guys. We got a green MACD, cool, but we have a double top pattern. Okay, so that's bearish. Bullish divergence, that's bearish. And it completely failed at this key level that I had drawn out. So we'll see if it comes and retests it. There's a good chance it does. But so far right now, this is bullish for stocks and bullish for bonds. Or maybe it's just bullish for bonds. It's definitely bullish for bonds. We don't know if it's bullish for stocks yet. But it's still above the 30-day moving average, so it could be going back up. Keep an eye on it, guys. 10-year yield, very important. This is the U.S. economy. I don't know how many times to tell you. So we got a point of resistance here. So we'll see how it acts at this level, because this level is already important. It could be performing some Elliott wave, and then it could just go right past there, fail at this previous point of resistance of around 3.75. Right now it's testing 3.77. So we'll see how it acts today, as a matter of fact. Natural gas is cratering beyond belief, guys, and it's showing some of the strongest bullish divergence I've ever seen in my life. So we know, this is what we know about natural gas. It's getting completely oversold. The RSI is overcooked. It was overcooked here, and it's overcooked now. We have a red MACD. We just got to keep monitoring it. Hopefully we see natural gas enter like a chop block, and it creates bullish divergence. This short flips to long, and we get a green MACD, and that would be an amazing trade we can make, because this thing is oversold beyond belief. Okay, so keep an eye on natural gas. We're gonna wait. Because it still definitely has some downside to go. It's down 10% today though, which is unbelievable. Natural gas has been taking a massive hit these past couple weeks, guys. Okay. On that, the dollar is moving today. I've stopped covering the dollar because it just bored me at this point. But wow, okay. So it stopped. Like futures are up. Like futures and metals and equities are up. So I'm very confused on why the dollar is just surged. It makes no sense. But what is it testing right now? That's the 30-day moving average, guys. But we have a green MACD, we have a long signal, and we haven't, well, it looks like we definitely had bullish divergence. I mean, look, the price went from here to here, but the RSI stayed relatively flat and actually went up a bit. So that's bullish divergence. And it's still on the downside, so it has a lot of up room to go. But it's fighting this level, which was a previous high, and now it's the 30-day moving average. So we're going to have to see how this acts. So this episode is a lot of like, we're just going to monitor. We're going to monitor how this acts today, how this acts today, how this acts today. But silver, we're going in. Oil also would be a good time to go in long, I believe. Do your own analysis, do your own research, and let's hop on to some news, boys. Let's hop on to some news. So the economic calendar this week. Okay, today, what do we have? Nothing important. Manufacturing PMI, yeah, nothing big. Okay, so tomorrow we have the ISM manufacturing PMI. This is big. So last month this number was 49. Whenever this number is below 50, it's not looking great for the economy. They're forecasting 48.5. Anything below 48.5, this could end up being a non-event, by the way, guys. So I wouldn't be too worried about it. Anything below 48.5, if it's substantially below, we could see the market just collapse. But I believe it's probably going to be like 48, maybe even a little bit above 48.5. I don't think this is going to do much because it usually doesn't. JOLTS job openings usually doesn't do much either. FOMC meeting minutes, this could move. We're going to have to see how the Fed members are thinking. Are they thinking hawkish or dovish right now? ADP, non-farm employment change, initial jobless claims for the week. That's important. Crude oil inventories, important. These are the things you just gotta look out for this week, okay? Non-farm payrolls, unemployment rate. That's definitely going to move markets. That is definitely going to move markets. So the last month was 3.7%. This month they're expecting 3.7% again, meaning the unemployment rate, they don't even think it's going up. Now let's say it goes down. The market will crater, guys. And I know in my opinion, it's really sad because the Federal Reserve is making it abundantly clear that they want unemployment to go up, and that's going to move markets up. That's how retail investors are thinking. The Big Short is a great movie, and the Ben Ricker, played by Brad Pitt, says, you know what I hate about banking, guys? It reduces people just to numbers. People want people to suffer with a high unemployment so their stocks go up. That's the world we live in, guys. And that's sad. Also, prayers up for Damar Hamlin. Like yesterday, the football player, Buffalo Bills safety. Hope he's doing great. Anyone who's using that incident to push their political agenda about this or that or whatever, you guys know what I'm talking about. Disgusting. Doesn't matter. We should all be united and pray for one another, because that was sad what happened to him yesterday. I hope he's doing great. Why I'm so very bullish on Lockheed Martin. It's a blog by Leo Nelson. I am too. Simply because I like using news as a way to predict long-term price predictions, not short-term. So I'm not going to look at a chart for Lockheed Martin right now. I just think that we're entering World War III, and the simple fact that we will be in World War III will bring investors to Lockheed Martin as a place to go for money. It's also, like he says, a high quality dividend growth stock. So yeah, it's definitely probably a good one. I might wait for it to go. I have to look at a chart because I'm probably not going to buy it anyways. But you guys can look at a chart and look at Lockheed Martin. Possible good place to park your money for 2023 because geopolitical tensions are rising. Companies can hire. So guys, AI is growing exponentially. I've heard this from Elon Musk before, and now it's 2023 might be the year for AI. I'm seeing this chat GPT thing where you can just like tell a robot to like write you a 5-page essay, and he's got that thing done in like 30 seconds. This AI is getting unbelievable. Companies can hire a virtual person for about $14,000 a year in China. You know China is going to abuse that. I don't know what the elites and the world leaders plan to do with all these humans that won't be working because robots are going to be working for them. But it sounds like a dystopian society, and it's grim. But it's not grim for the people that watch these videos. You know why? Because we trade equities, and we're going to make money, and we'll escape, and we'll be chilling in Mykonos and Greece and wherever the hell we want to be chilling, because we'll have money to do it. And we don't get involved with the corruption. We just enjoy life, because breathing air and seeing the sun and fresh daylight should be everything that you're grateful for, guys. Just waking up. You woke up and you get to watch this video. Be grateful, guys. Be grateful. Anyhow, this last I can't read the Wall Street Journal because I don't subscribe to horrible news articles, but get ready for the rich session. Well-off Americans could get hurt more than usual in the next downturn. This article disgusts me because that's not what's going to happen. It's completely the middle class that's going to get absolutely schmucked. Yeah. I mean, rich people are going to suffer because they own assets, and assets are going to go down. But like, it depends what assets you own. If you're rich because you own a bunch of over-leveraged tech stocks, or you like, but most of the rich people probably, or like at least in banking and Wall Street, collected a bunch of fees for selling horrible securities. And who do they sell those securities? Well, they collected the fees. The fees are theirs. But who do they sell the securities to? The middle class. And the middle class is going to suffer when those securities get absolutely demolished, guys. We're talking the replacement of a CDO, bespoke tranche opportunities, synthetic CDOs, just mortgage-backed securities in general. We did not fix the problem in 2008. We only made it worse. We just kicked the can down the road. A metaphor I like to use is, imagine you get a heroin addict to try and quit, and then for like 2 weeks he's off and he's going through horrible withdrawals. That would be 2008. And then instead of letting the withdrawals finish, we just gave him even more heroin. And he's been on heroin for 15 years. And we're about to see how bad the withdrawals are going to be now. And we're like 3 days into the withdrawals. We still got a couple weeks to go, guys. Okay? Middle class is going to suffer. That's the sad part, because the banks know they're going to get bailed out. They might sacrifice one or two like they did with Bear Stearns and Lehman Brothers, but this is not looking good, guys. Anyways, look. Okay, today, we're talking about today. Two best trades I see in front of me is silver going down in the short term, maybe 1 or 2 weeks, and crude oil going up in the short term, 1 or 2 weeks. You guys stay blessed. Keep making money. We're going to be out of the matrix and kicking back, enjoying some champagne on a beach in Greece one day, okay? I love you guys. Peace.